Hey everybody, Economic Ninja here. I hope you are doing great. Got a story out of Yahoo. I thought it was very interesting. We're going to talk about it. It's entitled Warren Buffett on Why Wall Street is Wrong About Inflation. And I can't wait to tear into this one with you guys because you know I've been talking about this. Wall Street's gotten this completely wrong. They're not pricing in inflation enough. And that we have some very serious times ahead when it comes to Wall Street numbers relating to stock prices and how they're going to relate to your pension funds. All right, so here we go. It says here, as inflation soars unchecked in the US, historical precedent would tell us that Wall Street should be panicking right about now. Excuse me, that is absolutely true. I do not believe that Wall Street is taking this serious enough. However, it is doing the exact opposite, even as the consumer price index has topped 8% for the past 3 months. Wall Street maintains buy ratings on 56.9% of the stocks in the S&P 500 compared to sell ratings for just 5.4% of the index. Now, we've seen this before where most of the stock market was held up by the FANG stocks. You know, Facebook, Apple, Google, and you know, prior to what happened starting in January, where it was just literally the whole stock market was held up by these core handful of stocks, including Tesla, and it was like, are you guys dreaming? Are you completely losing your minds? And it seemed like they have. But this is akin to what happened again from 2005 to 2008, where really, and even, well, let's say 2005 to 2007, because by mid-2007, things really started falling off of a cliff, right? But Wall Street had no idea, and you have all of these fund managers are still buying up stocks based off of information that they're getting from the S&P and other credit agencies that were completely false, right? And I think the same thing is happening right now because, yet again, the S&P, Fitch and Moody's are still rating a lot of these companies as buys that they should not be rating them at. All right, here we go. This many bullish ratings would be considered highly unusual, even in good market conditions. The 5-year average for buy ratings among S&P 500 stocks is slightly lower at 53.3%, but even this is unusually high on a historical basis. Now think about this, guys. During the dot-com boom, again, we had a complete euphoria where it was just buy, and that's that last 1/3 of a parabolic curve where everything seems to be going up and people aren't there. It's like, that's when, and I hate to be insulting, but you gotta call it spade a spade. It's the dumb money, the last bit, the people that didn't have the guts, they're always on the sideline, they weren't investors, then they finally move in. It's the same thing with the housing market, the stock market, any kind of market. It's that last bit of time, and you have to separate these things by time and human emotion, and it's that last 1/3 of the full pie that's moving straight up, right? And I know what you're thinking. Going, Ninja, the stock market is not moving straight up. As a matter of fact, it's going the opposite. But you have to remember, we still have, and you see it on YouTube all the time, the buy the dip, buy the dip. Buying the dip only works in a bull run. This is not. We are now moving into bear market territory. This is the beginning of the other side of that cycle, and that's when the stocks and real estate go down. Now, right here, so it says, so what has made Wall Street fond of inflation all of a sudden? Why are analysts churning out buy ratings left and right, even as consumers' purchasing power rapidly dwindles? Let's take a look at where Wall Street is going wrong and why investors should not be fooled. So let's see, here we go. And it says right here, before we dive into that though, we should remember that, as Warren Buffett once said, when trillions of dollars are managed by Wall Streeters charging high fees, it will usually be the managers who reap outsized profits, not the clients. In other words, when Wall Street is wrong, it could very well be an intentional thing aimed at towards increasing Wall Street profits. Now, you've heard me say this a bunch. I'm not a financial advisor. I'm not a financial professional, right? I'm an investor. I became an accredited investor when I was younger, and I'm not a real estate professional. I'm a licensed agent. I'm not practicing right now, but I was a real estate completely blanking on the term because of the amount of time I spent in real estate, right? In the eyes of IRS. But I'm not a fiduciary, where I am not a fund manager. I don't work for Merrill Lynch and I'm not here to sell you prepackaged products, right? And the thing is that most people that run your money for your retirement, they only make money selling you items that they sell. They only make money when they exchange your stock for another stock. So why are they always wanting to move money around? And you have to start looking at that as being their motivation, is the fees that they make, all right? It's like a car salesman or a real estate agent. They only make money when they sell you something. And that's why it's very vital that you are the one that cares about your money. You have to become the professional. To a certain standpoint, you need to know enough about investing that you are not just merely putting your money into the hands of a money manager, because what they're doing is they're moving your money around. Yes, they want to make you profits, but they also want to make themselves profits, and they don't make profits unless they're moving your money or they're making you a certain percentage, right? So it's very, very important. So I don't want to go through this whole article. I'm going to link it below so that you guys too, but right here, we're going to do this. These two paragraphs are important. It says, however, that is not the only factor at play here. Thanks to record easing money policies and fiscal stimulus over the past couple years, as well as higher savings from the beginning of the pandemic. Hold on, there might be a plane coming. Hopefully you guys can hear this. Consumers gained an unusual amount of short-term resilience to inflation. I gotta hold on for a second. This airplane's coming over super close to an airport. Gosh, these airplanes are amazing, or seaplanes. I think my son's gonna go rent one in a couple of days. We're gonna go for a flight. It says, this will not last forever, but for now, the effects are enduring in the minds of analysts and investors alike, because many companies are still reporting quarterly earnings that show year-over-year improvements. It is easy to be tricked into thinking sales are improving when the numbers are up, even though technically, if profits do not increase faster than inflation, a company is not really growing. And that is extremely important to point out. See, these fund managers are going over these year-over-year numbers are just amazing, but their year-over-year numbers are high because of everything that happened a year ago, okay? All of the fiscal stimulus, the easy, cheap money, but now that inflation has exploded, literally from December till now, but even inflation really started to wake up in August and September of this last year, right? Well, the thing is those numbers are not catching up in annual earnings right now. They're starting to show up in quarterlies. Your first quarter was pretty bad, right? Second quarter is gonna be even worse this year. And then that's when all of a sudden they start getting these really good numbers. But the thing is, if you think about it, even the second quarter of 22, right, is gonna be really bad. But if you couple that with Q4 and Q3 of 2021, it's still not as bad. So these analysts have to really start to wake up and go, stop looking at the year-over-year numbers, start to focus on your quarterlies. And your quarterlies are painting you a picture, especially quarter one of 22 was bad. Quarter two of 2022 is gonna be even worse. Start to wake up, this is a trend. Inflation is not gonna be going anywhere. As a matter of fact, it's gonna be getting worse, all right? So thank you guys for watching. Again, I'm gonna link this story below. Hope you guys have a great day. I'm gonna be signing off from Puerto Rico. I probably messed that one up. All right, guys, the Economic Ninja is out.